I would now like to introduce today's presenters. Prashray Kala is a partner with the global sourcing team. He assists clients on topics related to location optimization, enabling talent models for digital initiatives, increasing inclusivity and diversity in enterprises, quantification of business impact, and benchmarking of global delivery models. Rishi Raj Agrawala is a vice president in Everest Group Global Sourcing Team. In this role, he assists clients on topics related to global services delivery locations and workforce strategy. Jyoti Kumari is a senior analyst within Everest Group Global Sourcing practice. In this role, she focuses on helping multiple clients across global services delivery locations, talent and cost benchmarking, captive targeting, and peer intelligence. And with that, I would like to turn things over to Prashray.
Thank you, and welcome everyone to today's Market Vista webinar for Q1 2024. As you know, Market Vista is Everest Group's flagship report, which provides a macro view of the industry, essentially talking about the industry health, key trends, different types of sourcing models, key observations and expectations from enterprises and providers across different topics such as locations, talent, industries, growth, and any other trend which we see as meaningful for the industry. We keep the same focus in today's webinar. What we'll talk about are the key observations of the market in 2023, but then we'll pivot into what we really expect the market to grow and behave in 2024. We will also like to keep this webinar engaging for the audience, so I would encourage you to share your questions if you have any throughout the course of this webinar. We will try and answer as many questions during the webinar, but if not, we will definitely get back to you once the webinar's ended. That being said, let's dive head on into today's webinar. And the first section which we'll start with are our key observations on 2023. Now, the global services market, or as folks call it, the IT business process engineering services market, had phenomenal growth in the years 2021 and 2022, growing by double-digit rates, things which we had not seen in the last decade or so. But then 2023 was really a year when we saw normalization return to the way industry growth was happening. The growth rate declined, but there was still a growth rate of about 3 to 5%. A large part of this was driven by the service provider revenues, which didn't grow as much as expected. This was driven by pullbacks on discretionary spending, delays on project confirmation as well. And then this translated into what we saw in hiring as well. So while 2021 and 2022 were really years when there was a lot of competition for talent, many companies focused on hiring. In fact, many of them hired much more than they had initially planned for. 2023, again, as I call it, the year of normalization, the headcount growth across most providers was quite limited. That being said, the GBS, or the in-house delivery model, that grew significantly, both in terms of new centers being set up as well as increase in scale and headcount for the existing GBS centers. So what we are kind of seeing is different growth rates across the two different sourcing models which the market has. And then really a push from providers and from enterprises now that the focus has shifted from hiring at bulk to now more optimization and more focus on talent development, talent skilling. So kind of more inward-looking trends which we saw from many companies. Many had large projects and engagements which they did on this in the last year or so. So while we've talked about 2023, I think it's also important to understand how we expect the growth to happen in 2024. And before we share and talk about our expectations, we would like to start with a poll question for all of the attendees. How would you describe your business growth outlook for the global services space, which is the IT business process engineering services and product category for 2024. Is it strong growth? Is it limited growth? Is it decline? Would be great to see your responses. We'll give it some time as the responses trickle through. And I'll also ask my colleague Rishi to comment on what are some of the early things which we are hearing from our clients. Again, 2023 was a year when a lot of clients were worried about many factors, right? Macroeconomic, regulations. Rishi, what have been few things which you're hearing, and also how do you see these poll results match up with what we've been hearing from our clients?
Great, Prashant. So, see, as we enter 2024, some of the concerns from 23 do trickle in. Having said that, most of our clients are anticipating growth to be better than what they witnessed in 2023, right? So what there is an optimism in the market in terms of the growth expected for ITBP services industry.
And I think we are seeing the same reflected in the poll as well. We are sharing the results of the poll. Most folks have opted for the moderate growth, some for strong growth as well, but it's encouraging to see that nobody's expecting a significant decline. In fact, the share of moderate decline is also quite low. So it's neutral to positive, mostly trending towards moderate growth. Great to see that poll response. Okay. Rishi, would love to hear more about what we are expecting for 2024. Possibly we can move to the next section as well.
Yes. So let's get into what do we expect in 2024. And we'll start with the overall growth expected for the market. So as we saw for the business outlook across most of the audience, it was moderately positive. We expect a similar moderate growth from a global services perspective in 2024. Now, there are various factors which are driving this growth, as well as there are some anticipated challenges or uncertainties. And hence, the stance that we see from most of our clients is while they're optimistic, they're still cautious about investing heavily. Right? So if we move to some of the drivers for growth, right? What we see is that the deal pipeline across most providers that's improving, and there are multiple large deals which are up for renewal, especially in the second half of the year. Further, as we witnessed in 2023, similar to that, the GBS model continues to gain traction. We are seeing significant growth both in terms of GBS center setups, headcount, and we expect that growth to continue for the next few quarters as well. Right. In addition to that, as we have seen, there is a significant cost pressure on a number of enterprises. And what that is getting to is more offshoring to gain from the cost arbitrage, and hence there is this is getting to a positive cost driver, a positive revenue driver. Further, digital adoption by multiple players is also getting to work growth in the technology space across digital modernization, etc. There are a number of positive drivers pressure. There are certain uncertainties that we need to factor in. Starting with macroeconomic conditions, we have seen the poor economic performance across some of the leading countries like UK, Japan, which may dampen the demand. Further, multiple countries, this is an election, 2024 is an election year for multiple countries, including key source geographies like the US and demand geography like India. And what this may lead to is, for a short term, there may be a wait and watch policy and a temporary dampening of demand. Further, there are other factors like the impact of technology, and we can never predict when are we expecting a next Black Swan event, which may impact the demand for the global services industry. Now, having said that, let's look at how does the numbers look like. So as Prashar mentioned, 2021, 2022 were years of tremendous growth, and we saw 2023 as an year of normalization, right? This was also due to a higher base coupled with a conservative approach by enterprises that led to a tapered growth in 2023, right? As most enterprises entered into doing more for yes mindset in 2023. Going forward, what we expect a similar trend to continue for next few months. However, we expect a rebound especially in the second half of 2024. And thus at an overall level, we expect that the industry will grow at a marginally higher rate than 2023. An important point to note also is, see, while 5 to 7% growth may seem lower as we compare with the double digits growth in 21 and 22. Even historically, pre-COVID, the growth has trended in the range of 6 to 8%. So we are kind of moving to normalization.
Completely agree with that, Rishi. I think if we see this with the lens of 2021 and 2022, it looks low, but compared to historical, this is normal growth rate, right? That's interesting. And we're getting some questions from the audience. Rajita has asked the questions on some of the growth sectors which we see or which we expect to change in 2024. So I know there are different sourcing models, different industry, everyone behaves differently. Will be great if you can deep dive a bit about, what are the segments of growth which you see?
Great. See, there are different ways in which we can look at this growth and slice and dice the market, be it in terms of the sourcing model, which is outsourcing versus the GBS or the in-house model, be it in terms of the services, do we expect more growth in IT services versus business process services, and also in terms of industry. And we'll go into each of this one by one. Purely speaking, from a services perspective, given there is given the reduced discretionary spend, we expect, at least in the short term, business process services to outgrow IT services before we start seeing investments from enterprises in discretionary IT services, technology modernization. So that's one aspect of the segments. If we look at the sourcing model and from an outsourcing perspective, as Prashar, you mentioned, 2023 was muted growth across a number of service providers. However, based on the early indicators that we have, we expect growth to revive in 2024. And we are already seeing some positive green shoots across multiple providers and across multiple industries. Right? So just looking at the numbers from last year, if you see quarter on quarter, most in the outsourcing spend across most industries went down, especially for some of the leading industry verticals like the BFSI and TMT, right? And even from a demand geography perspective, it reduced or it went down for most geographies, with North America moving to a negative demand in Q4. So overall, in 2023, there was a reduced demand across all segments. As we look forward, based on the guidance from most providers and the consensus revenue estimate, we expect growth to revive going forward. We can clearly predict that Q4 would be the Q4 2023 was the quarter of growth bottoming out, and from here we would see revival in the service provider revenue or the outsourcing market growth. Right? Some of the factors which will drive growth in outsourcing, as we also talked about, is weaker base in 2023. The deal pipeline is improving, and then there is a strong demand for engineering R&D services, for offshoring of engineering R&D services. Further, what we are also seeing is for some time the revenue was on a downward trajectory. However, the book to bill ratio was improving, and as a result, there was a significant gap between the two. However, we would soon start seeing the impact of the growth in book to bill ratio in terms of revenue as well. And as a result, we would start witnessing the revival in revenue across providers. Right? If we look at some of the guidelines from leading providers, we are seeing that even some of the most disrupted industries, the likes of BFSI or technology, there are positive green shoots that they are witnessing. For example, TCS, Wipro, in the quarterly Q4 release, they highlighted growth in select BFSI segment, similarly in technology and in retail for TCS. So overall, we expect that the growth in 2024 will be driven by all industry segments.
Yeah. And Vijay, this is quite interesting. I think various of our charts, different types of analysis indicating the same thing, that Q4 of 2023 was, where we saw that bottoming out happening, whether we were tracking revenue growth for providers, whether we were tracking hiring, whether we were tracking outsourcing spend. I think it's quite interesting that various factors and levers are indicating the same trend, right? It's interesting that on the outsourcing side, things are improving. We do have another question from our audience who are interested in knowing what this means for the in-house delivery as well. And that's a large part of focus for our client segment as well, the in-house, the GBS, shared services delivery, as different clients call it. And I'll ask my colleague Jyoti to share some insights, since she works a lot with the clients for their in-house GBS strategy engagement. Jyoti, what have you been hearing from clients around growth expected on the GBS side?
Right. Thank you, Prashray. So while we see that both the model, the GBS and the service provider center setup models, both of them are increasing in the last couple of years. But what is interesting to take from here is that the GBS model is outpacing outsourcing. And what we believe that it will continue to depict the similar trends in 2024 as well. So as we move on to the next trend, that is about the GBS growth, the growth in GBS model. If we see from a center setup perspective as well, I'm referring to the chart that is on the left hand side on the next slide. It shows that the GBS model shows a strong growth momentum depicted by the green line, right? And following a similar trend, we can see that the service provider center setup also witnessed an increase in center setup activity. However, we can also see that in 2023, the center setup activity declined, which was mainly because of the cost and margin pressures. Further, we can also see that the gap has been widened up in the last couple of years between the service provider center setups and the GBS center setups. Now, if I talk about some of the interesting data points, in 2023, more than half of the GBS center setup activity was driven by first-time adopters, highlighting the enterprises who are leveraging the GBS model for the very first time. The interest in GBS model can also be witnessed among the small enterprises as well. So surprisingly and interestingly, 1/3 of the total center setups in offshore nearshore locations in 2023 was driven by these enterprises. Although one trend that I would like to call out here is that the enterprises who are leveraging this model for the very first time prefer to choose a location that is tried and tested. So be it a Poland or an India or a Philippines. However, enterprises who are expanding their location portfolio, they try to explore newer countries, newer cities. So if we can see that the growth in GBS model has been tremendous, the center setup has been tremendous, and a lot of factors driving this growth. So we can see that a lot of places are already tried and tested. There are lower barriers to entry. There's support, great support from industry associations, and there's a push from government side as well. And obviously, I cannot miss the factor, which is the cost arbitrage benefit that these locations provide. But what is interesting to note that the growth in GBS is not just reflected in terms of center setup activity, but we see a significant increase in the headcount and the number of services services that it is delivering today. Rightly. So even the similar picture is being painted by the media houses as well. As we can see, the newses are not just about the center setups, but the existing centers are also expanding in terms of headcount and capabilities to provide a better leverage to the parent enterprise. So now, if I...
This is quite interesting, and just wanting to deep dive on this further. When you mean existing capabilities or expanding scale, you talked earlier about how they might have a different location strategy in mind. Do they go to new locations? Do they set up or expand those capabilities in the same location where they are?
So we wanted to say that the GBS organizations, they are not just expanding into the existing location. So they are also exploring newer locations, might be a new city or expanding into a country, but into the tier 2, 3 locations. And we see that 60% of the GBS has grew their services portfolio uh, and penetration across the existing capabilities in the last 2 years as well. So it is in terms of capabilities, it is in terms of exploring new locations as well.
Interesting.
Right. So as of now, we did talk about that the GBS model is gaining traction. But yes, now let's look at some of the key parameters that which is driving this preference. So we have identified 5 fundamental growth drivers for the GBS model. So the first driver, which is normally at play, is that the GBS organizations are taking on a more strategic role within the enterprise. So they are not just, they are no longer seen as a mere cost centers, but are being viewed as an integrated and strategic partner for the parent enterprise. There's also evidence of increasing number of global leadership roles that are based out of these GBS centers. In fact, one of our recent research suggests that more than 40% of the GBS organizations have already expanded or are exploring to add global ownership roles. The next driver that I want to highlight is the increasing focus on retaining core functions in-house and supporting digital transformation initiative from the GBS organization. GBS organizations are now at the forefront of innovation for quite a long period of time. They are accelerating adoption of digital technologies by providing end-to-end complex work and setting up strategic center of excellence to deliver more value to the enterprise. Another driver that is leading the growth of GBS model is the increasing dissatisfaction of enterprises with the current outsourcing model. So earlier the expectation was just around service delivery. So if a service provider was beating service delivery and was meeting those basic first or few basic concerns of productivity or product service quality, enterprises were highly satisfied. However, based on our recent survey that we did, we have seen that the satisfaction level has really gone down the charts in the last 2 years. The prime reason for decreasing satisfaction is lack of innovation and lack of agility that providers are able to bring to the table. The last driver that I would like to call out is how in-house centers are strengthening resilience to mitigate risk concerns. As we have seen even during the pandemic and even today as well, during the ongoing geopolitical and macroeconomic condition, the GBS organizations are standing still and offering robust business continuity plan and risk management strategies to the enterprise. And this is something that can be resonated from our recent key issues survey, which is our annual survey to understand the market sentiments. So one of the particular questions that we asked about our respondents was a shift in the shift in the sourcing model. So if we see it on the left hand side, we can see there's a greater confidence in the GBS model, but we do need to understand that a part of this has been obviously driven from the past success of the GBS centers, which is encouraging more and more enterprises to explore and adopt the GBS model. However, we cannot say that it is at the cost of outsourcing, because a good chunk, like close to 40% of the respondents, expected to continue to leverage service providers. Even during our multiple interactions with outsourcing leaders and enterprises, we see a fundamental shift in how they look at these two sourcing model. A few years back, if you would have asked me this question, and I would have definitely said that providers and GBS are viewed as competitors, but now we think that they are not there to compete with each other, they are there to complement each other.
Yeah, and Jyoti, very interesting way you put it. Definitely, these are two types of different sourcing models which enterprises have. Yes, for the moment, we are seeing greater growth on the GBS side. Organizations seem to invest more in that, hire more under the GBS bucket. But we do continue to see great value being provided by providers as well, right? And definitely a key part of the overall global services strategy for enterprises. I think on the right-hand side, there's a view by different types of functions. We expect more growth on the business process side rather than IT, right? Again, given by the somewhat slowdown in discretionary spend. But Jyoti, I wanted to build on the points which you've mentioned about the two sourcing models and possibly pivot this into the next trend as well. You said that for a long period of time, GBS and outsourcing were seen as two ends of the spectrum. Of late, what we are seeing is an increasing engagement between the GBS and the providers themselves as well. So enterprises, when they think of their GBS strategy, are no longer strangers to the fact that providers can help them with transforming, setting up GBS in the first place. We'll talk a bit about this trend. This trends particularly come to the light post 2020. Pre 2020, again, enterprises used to think of these as two separate models, but post 2020, more and more organizations are thinking about leveraging providers' assistance to grow their own GBS as well. Various ways in which providers can provide value to the enterprise. One is through the GBS setups, whether this is just assisting in the setup of the in-house centers. The build, operate, transfer model is gaining a lot of traction, wherein providers set up the center, run it for a period of time, stabilize, and then hand it over to the enterprise to run it on their own. The other part is transformation of existing in-house centers. Now, again, whether that's people, process, technology transformation, providers are able to add a lot of value to the GBS operations as well. And third, which we see, is the carve out or the acquisition of GBS centers. There are enterprises out there who foresee a change in their sourcing strategy and are more than open to have providers take over the GBS centers and run it for them. Multiple reasons for that. Some organizations think that they can gain more economies, they can have better access to talent. Provider is able to transform the GBS operations better. But that being said, a lot of organizations still continue to do this in-house only as well. An interesting factoid which we saw pre-2020 and post-2020 is, if you look at the chart on the left-hand side, the share of provider-assisted GBS centers, that's increasing. And on the right-hand side, in what way are providers helping these in-house center setups? BOT is gaining a lot of traction. So definitely, providers also willing to pitch in and help their clients. Once they realize that the clients are opting for this strategy, providers are helping in this journey as well. And a lot of benefit, which especially the first-time adopters get from engaging with providers, right? A large part of that is getting access to the local expertise. And many of these enterprises who don't have GBS of their own have not run and managed centers themselves in the offshore context, get benefits from the providers' understanding of the local ecosystem, local talent, supply, regulations, as well, as they look to build their own in-house centers. We're seeing an increase in the number of carve-outs as well, of in-house centers. In a normal year, we used to track about 3 to 5 carve-outs per year. But whenever we see a time of crisis for the industry, whenever there is more pressures on the industry or disruption, we see an increase in the number of in-house center carve-outs. We saw this spike happening during the global financial crisis. That's 15 odd years, even before that. And now we saw a lot of this happen in 2021 and 2022 and 2023 as well. In fact, an all-time high, which we saw in the last couple of years. Again, focus being on optimization, enhancing resiliency, driving turnarounds, and improving efficiency and efficacy as well. Many examples, different firms, different enterprise logos, and yes, a sizable scale of business as well. Many examples which are running into thousands of FTEs as well. Okay, that being said, we do want to call out that the audience today can subscribe for a complimentary summary report. We are publishing our Market Vista Annual Report 2023 Year in Review and Outlook for 2024. Which will be a lot more detailed than the webinar which we have today. It gives you much more granular data, factoids as well. If you're interested in receiving this summary report, you can just click the link in the chat. We will share this with all attendees as well. And in case you have any questions, we can obviously answer them as well. That being said, we will continue with more trends. You have access to more trends in the full report, but in today's webinar, the next topic which we'll touch about is optimization. So I'll ask my colleague Rishi to talk through some of the areas where we've been seeing. Are there any specific distress or focus areas for 2024 that you've heard in your recent conversations with enterprise sourcing leaders? How are clients driving optimization?
Great question. So one of the theme that we see is continuing from last year is doing more with less. But there is a desire to grow. There is a strong cost pressures, and most enterprises are pushing their GBSs as well as their providers for cost optimization, right? And what we recently, based on the interactions that I have been having across a number of enterprises, sourcing leaders across a number of enterprises, cost optimization, cost pressures is one of the topmost challenges which they have highlighted for 2024. And accordingly, one of the key objectives from global services in 2024 is to streamline processes to optimize cost. Right? Now, what that means is most enterprises, they are expecting service provider build rates to remain flat, or they are likely to push back strongly on any increase in build rates by providers, right? Thus, we did this survey with a number of enterprises towards the end of last year, and at an aggregate level, given normal circumstances, the build rates are likely to remain flat in 2024. Of course, there will be differences by skills, by geographies, but at an aggregate level, we do not expect a significant increase in build rates. One of the reasons.
Yeah, and Rishi, it's always interesting, and sorry to interrupt you, but enterprises always expect providers to reduce rates or keep them flat. We are very cognizant of the fact that there is inflation happening in all geographies, right? Whether that's US, India. How are providers able to balance this, the expectations of the enterprise versus their own cost stack-ups?
Great question, Prashray. So effectively 2023 was a buyer's market given the slowdown in demand, right? So there is limited negotiation levers for providers in terms of pushing any significant increase in bid rates, right? And we expect that this will continue in 2024. In fact, it's not just business. Enterprises will start getting more demanding on some of the other levers, for example, scope recalibration or relaxing the payment terms or providing incremental cost savings through productivity initiatives. So these are some of the expectations that enterprises will naturally have from their providers in a tough economic scenario like this, right? However, providers, they definitely need to retain their margins, and we have seen that they have done that quite well. Even in 2023, when there was a strong cost pressure, the margins largely remained intact. And not just providers, even on the GBS side, we expect that there will be a pushback on any significant increase in cost. So what we are seeing is both GBS and providers, they are leveraging multiple other levers to optimize their overall service delivery cost. Right? But some of the levers like moving to a lower cost location, be it an offshore or a nearshore location, or moving to a tier 2, 3 location, which also provides you a sizable cost arbitrage, has been on the cards for quite some time. We are also seeing companies being more intentional about some of the other levers. So, for example, can we optimize the delivery pyramid? Beyond that, we also see there's a strong focus on some of the other smaller cost drivers. So, for example, rationalizing the support staff ratio, optimizing the real estate footprint. How does the real estate footprint looks like in a hybrid working environment? What's the impact on that on the overall real estate requirement? So these are additional levers and additional questions that even some of our clients are asking us now.
Okay, and it's interesting that we keep talking about locations, right? That somehow seems to be the first key of unlocking value, both in terms of cost as well as in terms of talent, right? So I think this will remain a big focus area for clients, getting it right the first time where you are. Jyoti, I know you track locations where companies are setting up their new centers, expanding. What are some of the trends which you are seeing? I see things mentioned here around newer locations, tier 2, 3 cities. What are some of the trends which you're observing in the different location strategy for our clients?
Sure, Prashant. So, as we see that the location diversification or portfolio rebalancing is on the cards, and all the enterprises and GBS, all the enterprises and service providers are thinking from it a strategic perspective. And as we move on to the next slide, we can see that the offshore locations is of more focus than the onshore locations because of the obvious benefits of cost savings. We do see that offshore nearshore locations such as Poland, Philippines, and India will continue to provide the sustained cost arbitrage benefits in the coming years as well. As we can see on the right hand side, the headcount growth is muted in 2024 across all the geographies when compared to 2023, but the preference for expanding in the offshore location is very clear. So we can see a lot percentage of the headcount growth is going to be there for the offshore location, and we see a very minimal percentage of headcount growth will be there on the onshore location. And as you said that we keep on tracking this GBS market, this location development across the GBS and the providers regularly, there are some of the interesting trends that we are seeing in the market. So we can see on the slide that there is a strong desire to leverage new locations in order to diversify portfolio. We can see the locations activity is not just confined to the most mature and the most leveraged countries, but there are more than 100 offshore nearshore locations that are getting leveraged for service delivery for the global service delivery. So if I talk about some of the interesting trends in, let's suppose, nearshore locations, so we know, and that the usual setup locations such as Poland and Romania, apart from that also, we can see there is a significant increase in countries such as Spain and Portugal. We can see a CAGR of 10 to 15% in the last 3 years. So these countries have actually gained a lot of traction. And mostly these locations are getting leveraged to gain access to niche skills and specific language of interest. Further, if we see that the enterprises and service providers are also expanding into tier 2, 3 cities as well. These tier 2, 3 cities offer multiple benefits beyond talent, such as lower cost, lower attrition, etc. We can see that this trend is not just in offshore nearshore location, but it is also there in onshore geographies as well. So if I talk about US, cities such as Dallas offer 15 to 20% of cost arbitrage over a city, let's suppose New York. If I talk about Philippines, despite Metro Manila accounts for close to 60-70% of the service delivery headcount and 80% of the center setups, many other cities are rapidly emerging, such as Davao, Iloilo, Cebu, etc. However, we also understand that the talent availability for niche or complex roles such as AI ML are a little less prevalent in the tier 2 locations currently, and tier 1 locations will remain a preferred choice for hiring talent when it comes to these complex services. And there are a lot of factors which are driving the offshore nearshore locations, and these factors will continue to drive the growth in offshore nearshore locations.
And that's quite interesting, Jyoti. Thank you for listing out the benefits of tier 2, tier 3 locations. But of course, being cognizant of the fact that sometimes high-skilled populations are concentrated in tier 1 locations, which is then ending up to more crowding in those locations as well. Rishi, if you can touch a bit more about some of these talent trends. I know we talked about location, but how does this feed in with the overall talent trends, attrition, skilling, which we're seeing across segments? I think that'll provide a very comprehensive view of how enterprises and providers are looking to unlock more value from global services.
Great pressure. So as we saw, 2021, 22, most providers, GBSs, they were struggling to hire talent. Those were the years of high growth, high demand for talent. 2023, given the overall market performance and also higher than the required hiring for most delivery organizations, was a muted headcount growth year. In fact, a number of providers they reported negligible headcount growth in 2023, right? However, having said that, this is not a sacrosanct trend. There is strict. We see there are pockets where providers as well as GBSs are struggling to hire, especially in niche areas. So, for example, Gen AI, for example, machine learning, or some of these niche digital skills, we are seeing that there is still a scarcity of talent, and hence the focus now is on upskilling talent and hiring for some of these high-end skills, right? So as I mentioned, what you see, like,
Sorry.
yeah, what you saw in 23, most providers, they reported tapered headcount growth. And as a result of this, even attrition was low across organizations given there were limited opportunities. There was hiring freeze across multiple providers. And as a result, the talent war that we saw in 2022, that normalized. This gave service delivery organizations a room to think beyond just talent acquisition, but more holistically on their overall talent development strategy. So based on the interactions that we have had with providers as well as GBS, now the focus is more on hiring future ready talent, hiring talent with the next generation skills, and also there's a strong desire to grow talent internally, and hence upskilling, reskilling is gaining a strong attention across most of these organizations. So effectively what we are seeing is there is a tectonic shift from hiring to building and developing talent internally and retaining the talent. With that, one of the messages that we have for providers as well as GBS organizations is what at an overall level you might be comfortable with, yes, in terms of your overall talent requirement, but this still needs to be a priority for future success, right? And one of the key dimensions to this, in a period like this where the headcount growth requirement is low, will be to upskill the talent, think about how you can move them up the curve so that your as and when the demand arises, you are able to meet your demand for some of these high-end next-gen skills internally, right? Further, you should also be thinking about how you can create a strong talent pipeline ahead of the demand. What are alternative sources that you can leverage? Jyoti talked about some of the tier 2, 3 cities, but beyond this also, we are seeing there, or we witness multiple other innovative approaches being used, be it active hiring or leveraging contingent gig workers, right? Apart from that, retention of existing talent, given you have already invested a lot in this, and also to reduce the attrition cost, should be a key priority. And what that would require would be a differentiated employee value proposition, uh, to ensure that there is a talent stickiness, as and when the market gets hot and as and when there is opportunity arises, right? Further, given the cost pressures and the desire for optimization, uh, focusing on employee productivity enhancement would be a key priority. And last but not the least, uh, there's a significant focus on diversity and inclusion as part of sustainability initiatives across most organizations.
Okay. Thanks for laying out the talent priorities, Rishi. We've moved towards the end of the webinar in terms of the insights which we had to share. We'll now be taking in questions. So time for Q&A. Please access the questions panel which you have within your console. Type in your questions. We'll take some of them. Let me ask a few questions right now. And for the ones which remain unanswered, we'll get back to you over email. Rishi, one of the questions which we've received is about Gen AI and its impact. Now, there are a lot of webinars out there. There are a lot of talk happening on Gen AI. We didn't talk much about it during this webinar. I think we thought that there's enough of talk already on Gen AI. So let's not spend the entire hour again on that topic, right? But a very valid question which we've received from someone is, how do we see Gen AI impact the workforce planning for providers? And I would assume this translates the same for in-house delivery model or GBS as well. Are providers now being cautious that with Gen AI expected to unlock productivity and other levers, they don't need to hire as much? How is this translating into strategies?
Interesting question, Prashray. So, as from a Gen AI perspective, what we have seen is 2023 was when most providers or even some GBSs, they were experimenting with Gen AI, and now we would start witnessing some of that move to pilot projects or use cases. However, from a headcount perspective, the impact of leveraging Gen AI on service delivery headcount requirement as of now seems to be limited. We are still, I would say, few years before we get to a level where we start seeing impact of GenAI on headcount, if any. And see, that's kind of what you would have seen with other technologies as well, right? At the time of industrial revolution, there was this that the requirement for manpower might go down. Similarly, we saw similar trends, similar talks as recent as when RPA was new and hot, right? That the requirement for some of the transactional headcount supporting ITBP services would go down. But effectively, what happens is what some of the existing work may be taken over by a technology. There are newer streams of work which come up, and as a result, the impact on overall headcount requirement is limited. Pressure, you are on mute.
Okay, sure. I am just going through and scoring through more questions.
Actually, there's an interesting question, Pressure, which probably you might be able to answer. So going back to the BOT and providers supporting enterprises on their GBS journeys. So the question is, when providers are assisting in center setup and there is an ongoing assistance inherently being provided as part of the JV model, can you share a bit more about what other areas are being covered when you say provided assistance in a captive?
Got it. And I think this question is coming from Shelly. Shelly, interesting question. So build, operate, transfer essentially is where provider takes in responsibility for running the operations as well, right? Now, whether that's for 2 years, 3 years, generally that's the time duration which we see. There are certain enterprises, though, who like to control and manage operations from day one. And for those kind of enterprises, when they're looking to set up their own centers, they rely on providers just for some aspects of setup or some aspects of operations, but not the entirety. So they own the delivery outcomes from day one. But the kind of support which they essentially need are things like legal entity setup, hiring at scale in that particular geography, possibly technology or transformation as they are transitioning work. And those are models which we call assisted, wherein the enterprise still wants to continue managing and controlling all work, but because it's a first-time mover into a new or possibly offshore geography, just decides to take providers' help on certain areas. That's what we call the provider assistance model. And this can be setup related as well as ongoing assistance. Providers provide all kind of flexibility on that. And definitely an area which is improving. Okay. I think we just have time to squeeze in one last question. Jyoti, if we can keep this a bit short. We talked about APAC, we talked about other geographies. A question coming in from the audience around nearshore US. What are some trends which we are seeing that?
Right. Interesting question, Prashray. And we continue to see this question in all of our webinars where we talk about locations. So we see that the enterprises and service providers are leveraging locations such as Costa Rica and Mexico and Latin America due to its proximity to US, talent availability, and low operating cost. Both these locations are getting leveraged for ITBP service delivery. Interestingly, we also see there's an increased interest for Colombia as this country is providing a cost arbitrage of close to 30 to 40% over Mexico City. Currently, it is primarily being leveraged for non-voice BPS work. So 3 cities that I want to call out would be Costa Rica, Mexico, and Colombia.
Okay, thank you for that, Jyoti. And we've reached the end of the time which we had for the webinar today. That being said, we do want to call out that Everest Group will be having its event focused on technology and business services. This will be a key event for executives in the global business services, sourcing, vendor management, and shared services functions. Please pencil in the dates. This is September 30th to October 2nd in Dallas. More details available on our website. We also want to share more resources available on our website and in our research. Please check out our latest blogs. We cover a variety of topics, whether they are focused on industries, technologies, locations, pricing, solutioning, a variety of topics which we cover in our blogs and in our research reports. And yes, there are a bunch of related reports which you can access on our website as well. There are many reports, again, which cover this overall macro view, which we talked about today. Whether that's from a locations, talent, GPS, outsourcing point of view as well. All of these resources are available on our website. Please navigate to everestgrp.com, where you can see all of the blogs, our reports, and also details of our upcoming event in September, October.